You are listening to ChartingWealth.com for Tuesday, the 22nd of November, 2017. On this shortened Thanksgiving week, the markets continue to boom. They are moving up. The total market is represented by IYY. We're looking at our two-day candles, and ever since the election of Donald Trump, starting on our candle ending on the 8th, actually that was election day, our two-day candles on the 8th, the 10th, the 14th, 16th, the 18th, and the first of the two-day candle starting on the 21st. What is that? 6 candles all up. Now we've just redrawn our trend line. Our old trend line starting from when the trend originally started needed to be redrawn because it wasn't connecting the bottoms of 3 candles. If you don't know how to draw trend lines, you need to listen to our training on trend lines. You can find it at the website. You can also find it at Charting Wealth's YouTube channel and on iTunes. So you need to know how to draw trend lines, and we do see a continued up moving trend line. Total market up 0.81%. That Thanksgiving holiday effect is in full swing as these markets continue to boom up. Let's look intraday, see what we see. We see that the market had been sliding sideways for about a day and a half from the afternoon of the 17th through Friday the 18th, and then starting Monday up in the morning and the afternoon, well above our redrawn two-day trend line. And remember, our weekly charts are still in a confirmed down move, getting very close to crossing over, going up. That's in keeping with, of course, the holiday season we're in. If you want to know more about all these different kinds of trends, I urge you to get yourself a copy of the Stock Trader's Almanac. I've already ordered my new one for 2017. I'm still using the old one that's left from 2016. I think if you order a new one, they'll probably send you a copy of the old one. You need to keep up with it through the end of November and on into December. So, important to pay attention to what's going on these charts and historical trends. Now, let's go to the S&P 500. It too is booming up. We have the 6th candle that is halfway drawn. The derivative oscillator continues to move up. The PPO, that's the price percent oscillator, the same as our old moving average convergence divergence indicator, except the PPO uses price percent as opposed to just dollars. That's the way we're able to compare things across the board rather than just at dollars. We can use price percent. And what do we see? We see the price percent oscillator continuing to move up, just like the derivative oscillator. Actually, we closed out of the Bollinger Band just barely at the end of the day. These volatility bands have widened as volatility has increased with upward momentum, thanks to the enthusiasm and exuberance with the new president-elect as far as the markets go. And again, we do have the holiday effect in full swing. Don't know about that? Again, read your Stock Trader's Almanac. What do we see going on intraday with the S&P 500 as represented by SPY? Up movement in the morning and the afternoon. We also see what appeared to be getting close to crossing over, going down on that 4-hour chart, boomed up, and the PPO pulled away from the trend line, our red trend line, which represents, I was looking there at our exponential moving average, represents 8 periods. So we do see that the also derivative oscillator gained a little bit of energy there. So we'll continue to follow these trends and see if there's any pullback and any potential jumping in point. But the markets do continue to move up, up, up. It was a good Monday for the markets if you were looking for upward movement. Now let's also head to the Qs, which is going to be, for the record, 0.76% is what the S&P 500 was moving up. The Qs, which is the NASDAQ 100, up 1.04%. We have a crossover finally on the MACD on the 2-day trend line moving up. So we have 3, really 2.5 two-day candles, first day of the 2-day candle, but we have strong up movement. After the 2-day candle ending on the 10th, a lot of indecision, then some down movement actually on the 2-day candle ending on the 14th, And on the 16th and 18th, we started having that up movement. We're drawing a trend line. Not the best trend line to actually draw. We prefer to start drawing our trend lines after the cross between the PPO and the signal line, but we can do that as things move along. We did see what we like to see, that is the PPO crossed at the same time the derivative oscillator did. That typically means a much stronger crossing if they happen at separate times. Let's look intraday and see what we see on the 4-hour chart. Strong up movement in the morning, by even stronger up movement in the afternoon. Remember, we are looking at a Heikin Ashi candlestick. These candlesticks are different than your typical candlesticks because they help you track average pace. You want to learn about those. We've got a great training on Heikin Ashi candlesticks. You can find that at our website, at our YouTube channel, and at our iTunes channel. So please check those out. Derivative oscillator maintaining its speed. And of course, we see a kink up in the PPO moving higher. So we'll continue to watch as things progress with the cues also. Things are just booming. Now, what is interesting is to go back to our 2-day chart and we check out our last. We see gold is up for the day. Now, gold still has down trend lines and still has down candles. Gold is up for the day 0.37%. Now, as we look at gold, let's look intraday. Again, we've crossed over going down. We've been crossed over going down. We've been crossed over going down on the weekly chart and the 2-day chart. Let's take a look and see what our 4-hour chart is actually doing. It has been slipping sideways and really is still just sort of bouncing off the bottom. It's not yet crossed over going up, maybe getting ready to do so. Now, typically, when gold goes up, the rest of the market goes down. So we shall see. Gold was up for the day. The rest of the market was up also. Let's see if gold is just sort of finding its way right now. Is it bouncing off a bottom or is it getting ready to make new lows? Remember, we have big, strong down movement in our biggest wave, the weekly chart, and our 2-day chart. Let's see what that 4-hour chart's going to do. We do not know, so we shall watch. Remember how prescient this 4-hour chart has been, but also remember our 4-hour chart stopped working at the end of last year. So just be careful and forewarn that your bigger movements are actually confirmed down on the 2-day and the weekly. So be careful if you do look to get into a 4-hour chart. Pay attention to what's going on, if indeed it crosses over going up. Folks, that is where we are at the end of the day on a Monday where the markets are up. We appreciate you being with us. You have questions for us, concerns, you want to sign up for our newsletter, you can do all that at chartingwealth.com. With that newsletter sign up, you will get our How to Read a Stock Charts video. You'll get the layout that we use at freestockcharts.com, and you'll get a link to our daily market worksheet that we encourage you so much to fill out and keep every single day. If you want to know how that worksheet works, please go to our YouTube channel. We've got a great training there on our daily market worksheet. Same at iTunes. Same at Charting Wealth under training. We appreciate you guys being with us so much. You appreciate what we do. Give us a 5-star rating. Say something nice about us at iTunes. Also subscribe to our channel at YouTube. That is where we put up all of our information first, and it goes to those proprietary folks that are our subscribers. We thank you so much. God bless. Wish you the best in learning how to read these charts, because, my friends, that's what it's all about. When you can read a chart, you can make the market work for you. Pay attention to the charts, not the noise. God bless from chartingwealth.com.